Hello and welcome to Crypto Weeklies. Today we are going to discuss about Polygon MATIC, its recent rally, its machine learning based price forecast, as well as regression analysis and accumulation strategies. None of the content is financial advice. As you can see, this is the weekly chart of Polygon and its token MATIC, now soon to be named as POL. You can check it out over here. There are some upgrades from MATIC to POL which have been initiated. Thus far we can still call it as MATIC, and this is the channel for MATIC and its price action starting 2021, about 3.5 years ago. The price since that point has been trading between this 30 cents and $3, this range. Right now the price is close to the bottom of this range. This is the Fibonacci retracement, and on top of it you can see there is this blue line which turns orange at times. Whenever this is the 200-week moving average for MATIC, and whenever this line goes from blue to orange, that's when the price is under the 200-week moving average. Typically a good buy zone for most of the mature cryptos, provided they don't go down with time, as in like they stay relevant across multiple cycles. What we can see the similarity between this prior cycle, you can see Polygon spent about from 2019 till about 2021 and a half years in this range before it broke out to the upside. Now it has almost spent 2x of that time to about 3.5 years in this range between 30 cents and $3. So let's see if the new token has some legs in it. You can see right now the tokenomics is still the same at about 10 billion MATIC, and circulating supply has gone down. Maybe that's because of migration from MATIC to POL. Now that we have covered this at a glance level, you can see today the market sentiment of the major cryptos, that is the social sentiment, is at around 50. This is checked at using last 24 hours related news, some bullish, some bearish. Mostly bullish news over the last 24 hours. This is calculated using machine learning techniques. In terms of the word cloud of the popular narratives over the last 7 days, the bullish sentiment is back. You can see this is again compared to this bearish sentiment, which is slightly a lower narrative. It talks about Cardano, XRP. Yesterday XRP had a bullish day. We covered the price forecast yesterday in our video. You can check it out on the channel. Also Solana related narratives, again presidential candidates, Bitcoin being the biggest narrative talked about related to crypto on YouTube and X, followed by Ether, also one of the top narratives. Some of the new narratives coming up over here talk about October being an October inflation related data, as well as SEC and the CPI related news. So those are some of the recent narratives gaining some popularity. Now if we focus our attention on Polygon MATIC, this is the first analysis that we will be conducting. All of the content available on cryptoweeklies.com. The link is on the bottom of your screen. This is the average price, weekly average price for MATIC since it began trading. You can see there is two distinct trading range, one between 1 cent and again between 3.5 cents. Now the second range between 35 cents and again $3. For this machine learning based price forecast, these are the three scenario forecasted by the model. The base case is in pink, the bull case is in yellow, the bear case is in green. These are one standard deviation bull case and bear case. The base case for Polygon and its token MATIC at this point is between 35 cents and 40 cents. The current price action you can see over here is at around 43 cents. Again, there has been a bullish surge in MATIC's price. That means we are in this bull case scenario, a week by week bull case. For this week at closing on September 11th, the average weekly price is at around 41 cents. This is the one standard deviation ceiling till about 84 cents towards the end of the year. And if you believe that this week, due to some of the token upgrades, the one standard deviation case is not sufficient and that ceiling might breach, the two standard deviation at 95% confidence for this week is at around 47 cents. and if this case were to go back to a normal mean reversion after the token launch and the mania phase kind of died down, the 1 standard deviation ceiling again between 41 cents and again 84 cents makes the bull case ceiling. The bear case floor is between 15 cents and 20 or 30 cents at this point. The purpose of this forecast is not to tell what will happen in the market, but that is exclusively dependent on market forces and outside of any price forecast. But with this historical data, what we can say for some confidence level, like this is at around 70% confidence level, that if there are rallies, this is where their 1 standard deviation ceiling would be, and if there are any crashes, this is where their floors would be. If you are interested in a tabular view and week by week analysis of these forecasts, they are available on the bottom of the screen. The base cases in middle, to its left are the 3 bear cases, and to its right are the 3 bull cases, each column representing 1 standard deviation, 2 standard deviation, 3 standard deviation respectively. So you can check them out over there as well. In terms of regression based analysis of MATIC at this point, checking out whether it's overvalued or undervalued. Right now the fair value per this polynomial regression analysis for MATIC at a weekly level is at around 95 cents. That means the token is undervalued more than 1 standard deviation floor, which is supposed to be at 49 cents. The price is lower than this 49 cents level. So if there is a mean reversion rally, the first level to watch is the 49 cents level. The second level to watch at a longer time horizon at around 97 cents level. And if you were to focus MATIC in this 70 percentile or about 1 standard deviation price action, you can see back in February of 2023, that was the last time the 1 standard deviation ceiling was breached. At that point, the 1 standard deviation ceiling was at around 99 cents. Right now the 1 standard deviation ceiling is at around $1.87. So that's the current regression based valuation. Again, Polygon and its MATIC being undervalued. If you were to accumulate a MATIC, again there are 3 models that we have. The first is the simple moving average based shorter term model, which provides an analysis of whether MATIC is close to a short term peak. Per this analysis, this is the normalized between 0 and 1 risk. The idea with this analysis, whenever the risks are low, that is, again you can see over here, when the risk that is this in plum color, when the risk become less than 0.1, that's where the buy zones in terms of short term accumulation are. At this point, the risk is again the time is third best phase to accumulate MATIC per this risk analysis. The second model that we have on the website is the 1 cycle, or the dollar cost average for 1 cycle model. Per this analysis, when this is calculated using the proportional difference between the price and the fair value polynomial regression function. At this point, the risk for this analysis is 0.04. Again, the best time to dollar cost average MATIC per hour analysis is right now. You can see typically when the price is in this lower than this fair value regression band or regression line, that's when most of the decent buy zones for MATIC have occurred. So this is the key levels to watch again for this analysis. If there is a mean reversion trade, it's around $1 back to the fair value, and the peak ceiling forecasted or analyzed at this point in time is at around $2.77. And again, last but not the least is the time weighted average price, which is the longest term horizon based accumulation model. And per this analysis, whenever this price is below this yellow line, which is the time weighted average price, currently at around 65 cents, price when falls below this blue line, that's when the risks are essentially zero. You can see over here right now the risk for accumulating MATIC is zero. That is provided that you have the multiple cycle, or at least more than one cycle outlook accumulating at these points. You can see in the last cycle or also during this cycle, whenever the risks fall below when the price falls below this blue line, that's when you get the best possible deals for accumulating MATIC. So all in all, for the TWAP model, best time to accumulate. For the DCA model, again the best time to accumulate is right now. Per the SMA model is the third best time to accumulate, provided that we are again at a shorter term, considering at a shorter term level. In terms of where the wider crypto market stands, you can check this SMA analysis for Bitcoin and ETH, which totally together they control about between 60 to 80% of the crypto market by market cap, and both of them are currently at this low risk band between 0.0 and 0.4 risk. And if you were to look at the market as a whole, right now per the PeakValley analysis, the latest risk score is at 0.17. We have spent a lot of time in this low risk environment. Wherever the color is in green, that's a decent time to accumulate. That is because at that point the risks are below 0.2. And we can see over the last several months or so, we have spent at least starting end of June, and that is July of 2024, most of the time has been spent in this territory, that is the green territory. With this, I'd like to conclude the video. Hope you like this content. If you did, please subscribe to the channel. Also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.